It's time to do business again. 55 minutes of business is what we have planned for this time, and it happens on Business Incorporated. And here's what we have prepared for you. In Zimbabwe, it's not a very good one. Import duty begins today, and motorists will feel the pinch. Making some strides in Egypt, financial inclusion is up to over 64%. We'll be revisiting windfall tax in Nigeria. Different parties, different perspectives. You're welcome to the program. I'm Ini John Mekwa. We start from the global space. As usual, oil prices fell for a fifth session on Thursday as global demand concerns exerted pressure on the market despite a decline in the U.S. fuel inventories. Take a look at the number. There's 0.16 in the red. That's what we have for Brent, and it settles at $75.94 a barrel, while for WTI, $71.71. Down 0.31%, and prices have plunged amid reports on Wednesday, late yesterday, of revised employment statistics in the United States, which we know is the biggest oil consumer, and it showed that fewer jobs were added in 2024 than previously reported. Also, there's the weak economic data from China. China also very important, the second largest economy and largest oil importer. And our investors are also expecting OPEC Plus to lift some of that voluntary cuts from their members. And still in the global space, gold prices regained lost ground to hover close to all-time highs after minutes from the U.S. Federal Reserve's last-minute meeting showed officials strongly leaning towards an interest rate cut at their September policy meeting. We keep our eyes on the numbers right here. Spot gold is in the green, 0.1%, $2,516.01 per ounce, while U.S. gold futures dropped 2,547, but you notice it's still doing that 2,500, which is that all-time high that it hit some months ago. And looking at other metals, spot silver was up also 0.6%. There you have it, $29.61 per ounce. Platinum also up, gained 2.6%, $970.75 is the price for an ounce, while palladium also in the green, 2.7. We see green sentiment spreading around the metals, also with that expectation of a cut in September. Of course, what we're trying to find out now is what level or what percentage of cuts will we see by September. And then we come back here to Nigeria. Togo and Benin Republic owe Nigeria cumulative $14.19 million for electricity supplied in the first quarter of this year. This was revealed in a report by the Nigerian Electricity Regulatory Commission, which highlights the non-payment electricity bills by the 4 international bilateral customers being supplied by Power Generation. The report named the foreign companies to involve Para SB in Benin Republic, that they owe 3.15, Transcore SB in Benin, 4.46 million, Mainstream Nigelec in Togo, 1.21 million, and Odupani Seat in Togo also 5.36 million. According to NERC, none of the companies made any payments against the cumulative invoices issued by the market operator for services rendered during the quarter in question. In addition to the foreign debt, NERC notes that remittances were made by local bilateral customers within Nigeria against the cumulative invoice of 1.88 million issued for services rendered in the first quarter of this year. Now, Fidelity is in the news. Yesterday, we did hear about them being fined over $555 million. They've reacted to that story by the National Data Protection Commission, being fined to the tune of $555.8 million for violating customers' data privacy. The bank confirms that actually there was a complaint by a customer of possible breach after an online request to open an account was received, to which the bank began an internal investigation while the account was immediately placed on post-no-debt status. Fidelity notes that the incident, which started in 2023, has seen a number of discussions with the NDPC, and they remain open to convince the regulator that there was no breach of any extant law or regulation. The bank is also assuring customers of its unwavering commitment to uphold the highest level of ethical standards in all dealings with customer data. Now, I'm sure you have heard of that CBN business survey. Well, following the optimism portrayed in that by the Central Bank of Nigeria's business survey for the month of July, there are suggestions on how the forecast can actually be achieved. For the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani, dealing with insecurity that has disrupted agricultural production should be prioritized.
The insecurity problem is actually solved two ways. One is the tenacity of the security agencies, which has been proven not to be so strong in recent times. But more importantly is the fact that the investment in telco infrastructure, which will now you use drone technology to identify and bring to book those terrorists and kidnappers. Once you can have that investment in telecommunication, which was emphasized at the town hall meeting last week, then you will see that you will reduce the propensity and the ability of these criminals to go in and disrupt agricultural production, kidnapping people in their farms. So it's a major issue. One, you have to deal with power supply, because without power supply, the investment in telco infrastructure is going to be suboptimal. Two, if the telcos are able to liberalize their pricing and charge adequately, then they will invest more. And once that happens, then it becomes very easy to identify and actually arrest those perpetrators of kidnapping and ransom around the farm area. If that happens, and the farmers now know that they are safe, they can go to their farms, and even if they are moving their products from their farms to the markets, they are not going to be kidnapped. You will see a major boost in agricultural production.
Yeah, I guess having the forecast is one thing. Actually, achieving that forecast is another, and that's what Mr. Rwani is saying there. If we really want to, build on that optimism perception from the CBN business survey, then the issue of insecurity, especially when it has to do with agricultural production, has to be handled. Now, another matter is the proposal of a 70% tax windfall on realized profits made by Nigerian banks. We've had several perspectives shared on this. Now, let's speak to the managing partner, Transact Partners. Mr. Eben Joels joins us in the studio to also share the perspective of Transact at this time. Good afternoon, Mr. Eben.
Thank you, Ini.
Yeah. So, I mean, we've seen or heard some people say, well, this is good. If the banks have made some extra profit, it should be captured back into the economy for developmental use. And, well, of course, a lot of the bank players are not happy with this, especially when it was moved from 50 to 70%. But what has Transact seen?
I think for us, it's not so much about the rates, right? Whether it's 50% or 70%, but about the principles and about whether a windfall tax is a good thing in the first place. Companies are capitalists in nature. They would allocate their capital based on what gives them the highest return. I'll give you an example of a company that grew as a result of massive changes in policies or in the world. Take pre-COVID, a company called Zoom was not widely known. Yeah. During COVID, their stock price rose by close to 1,000% or more. And they're not the only ones. There were other companies that were engaged in things like food delivery. There is a major one in the US called DoorDash. They all used that opportunity to transform their business and capture tremendous value for their economy. Don't forget that one of the ways we measure the size of our economy is the size of the of our stock exchange. So my point is the windfall tax on banks in particular does not necessarily mean that we are capturing value for the economy when we tax them. Um, there's something else that we like to talk about. In today's world, it's all about sustainability. In fact, in accounting today, sustainability standards are some of the things we are requiring companies to comply with. Now, when you impose a windfall tax, it is supposed to be a one-off windfall tax because something happened, and you want to invest it in infrastructure, that is not sustainable because in subsequent years, when perhaps that infrastructure is not fully built, you've opened a line of expenditure that you need to continue to fund.
But other countries do windfall tax.
No,
In the UK, for instance, when the oil companies were having a boom, I think that was during COVID or so, or last year, there was windfall tax, and it's supposed to be a way of, getting back the excess into the economy.
Yes, so it's always controversial. And I think what you mean is, not the UK, is probably the EU, imposed a new windfall tax on oil companies sometime in 2022. But before then, sometime between 1980 and 1989, the US had a similar windfall tax on oil companies, for example. And the net impact of the studies shows that the impact, and they had to cancel it in 1989, that the overall impact of that was not good for the economy. So, but in our own case, this tax creates more questions than answers. The first one is the banks have already paid, say, 30% or slightly over 30% on their income for the year. That income includes all income from all sources, which would include foreign exchange gains, realized foreign exchange gains in particular. So are they going to pay the differential between 30% and perhaps the 70% now? Or are they going to be paying a flat 70% on just this line of income? That's the first question. The second question would be, the Central Bank of Nigeria recently requested banks to recapitalize their, and the banks are going to the market asking people to subscribe to new offers. There are other ways of keeping this money in the system. For example, could the government have thought about us not distributing this income so that it is within the system and used to build the economy? We could simply say, you made excess gains on foreign exchange when the naira, the devaluation, or the naira was allowed to float. This amount of profit you made, leave it perpetually in your balance sheet. It's not distributable. It's not income.
I think they did say that because there was a time the CBN sent warning to banks, not to depend so much on the
foreign exchange.
Yes. So they did
yes.
that.
So without if the CBN is allowed them to treat that as capital, for example, many of the banks will not be going to the market to ask.
Yeah, but the essence of the recap is to bring in new capital.
But that is already capital that is there.
That's exactly. It's an existing capital in the system. But the CBN wants new capital from outside the system.
Well, so what I'm saying is that in my head and what I think, this is part of the things that are further stifling this economy. You could ask yourself and say, what are the major areas of production in our economy right now? Is there any sector that you think is booming or doing well right now in Nigeria outside of financial services? And if financial services are the only one that seems to be doing well because they were sitting on some amount of foreign exchange, and then when the value of that foreign exchange rose, they made, in quote, artificial profit. That if they sold it, it becomes realized profit. Now, are there other ways to keep this within the economy without us taxing it and taking it further from the hands of private sector people?
So what are the other ways that you suggest of using this extra profit so that, you have a larger number of the population of Nigeria feeling the impact?
So, like I said, let it be available as undistributable capital for the banks. And you would watch the banks, grow naturally. You have more credit available for genuine businessmen, rather than you take the money in cash from the banks and you give it to politicians. You and I know that when government says something is going to be spent on infrastructure, a lot of it ends up in private pockets.
Yeah, we don't have proof for that for this. We don't have proof of that for this, Mr. Iben. Yes. So let's stick to what we can prove. And
yes, but that is factual that our ranking in the global corruption index is still very high. So my point is, anything going into the hands of the government is better to have private sector continue to lead in strengthening our economy. Our country can only survive when we strengthen the hands of private sector players.
All right, Mr. Iben Jules, Managing Partners, Transact Partners, thank you so much. I'm sure your views also added up there to the conversations on the windfall tax. Thank you for your time.
Thank you.
Let's take a break. When we come back, we head to the markets as far as other segments here in Business Incorporated. Stay with us. Welcome back to watching Business Incorporated right here on Channels Television. We'll head to the markets now, and I will not reveal the color of the day. I'll just leave wheel. Thank God I don't have red, neither do I have green, so I'm free. Wheel.
Yes, we know.
Do you come bearing good or bad news?
I come bearing good news at intraday. It's always intraday news. That midday, glamour that we have.
What's the color of your news?
It's green. It's green. The color of my news is green, but we'll wait to see how the color.
It's close.
Yes, close out today. But expectedly, as analysts are expecting, this month is a bullish down.
Yes.
Really
bullish.
Abdul Rashid did say that it was a bullish down day because we have more gainers than losers, and the market is still in the red.
Yeah.
So it's more like, okay, we'll see how it goes. August historically is known for its downtime, but let's see how September.
Yeah, you noted some points yesterday. It's summer period. People want to chill with their family members, travel, and then you thinking about school fees, again, just around the corner. So don't worry, we'll get back up.
We'll definitely get back up there. So we'll see markets opening at intraday. Positive sentiment seen at intraday. We see Nigeria's NGX was trading up 0.05%, 95,000 still holding on to that level there, and South Africa's GSE is also trading up at intraday 0.62%. We're seeing Egypt's EGX 30 at intraday is also up 0.25%. That's mostly positive sentiments that we're seeing now. Now, Kenya's stock market closed in the green on Wednesday, 1.56%. But let's just get behind the scenes at the NGX and see what's happening there. And Ambrose Omodion is the Chief Research Officer, is there to give us the numbers, the facts behind the figures. Good afternoon, Ambrose. It's good to have you on the program. Ambrose, just get us behind the scenes there. What's happening at the NGX? What's driving numbers at intraday?
Yeah, for me, I would say that the investor are still kind of doing what we call a sector rotation at this point. And don't forget that in any market, there are some sectors that lead the bull or the bear. As we speak now, I think that the interest in Owando and some insurance company have supported the market this afternoon. And I believe that before the market close for the day, we'll know if this green light we're seeing now will sustain at the end of the day. But for investors in Nigeria, I think it's becoming obvious if they fail to look at data. If you look at Nigeria data, the month of August and September are always a missed month for the market. Knowing that for the last 27 years, we saw that the month of August was down for 18 years and up for 8 years. So that August is never a good market for investors. For traders, take advantage of that to buy into value and wait for the earnings season that comes in October. That is why the month of August and September is what I call it a positioning month for traders, and why investors are looking for where to go make money at the end of the day. Once the month of August and September comes to an end, they usher into the last quarter of the year, which that seasonality play out in that season. For me, what we are saying now is an opportunity for investors to accumulate value, and why traders are buying into what? Into rotation to make money on the short run.
Oh, so we've seen banks been in the news now. We've seen them, trading down. Yesterday, banks was down. Yesterday's trading session, sentiments a bit shaky with the banks. There have been incidents of cybersecurity. Last week, we saw an attempt to hack into GT Bank's website. This week, we also see Fidelity Bank also, addressing an alleged data breach by the NDPC, that's the Nigeria Data Protection Commission, over 555 million in fine. We're just thinking about how this plays into sentiments in the market. But before before you give us your analysis, let's just get a quick look at what banks are allocating for data security. I see the banks in their capital raise, they're beefing up their security, their cybersecurity infrastructure. You could have that on the screen very quickly. I see that GT Bank is allocating about 15 billion naira for security and fraud prevention software. Access holding about 68.62 billion naira. Zenith Bank 19.85, Fidelity Bank 19.01, and we also see FCMB Group also allocating 16.22, primarily for IT upgrades and also cyber security. These banks are investing in technology and this hardware. How do you think the focus now, if you see the bar charts, the charts showing this, displaying this, how does it feed into investor sentiment about the banking sector and the future of banks? Because a lot of calls, we've seen reports here and there, the banking sector might not perform well after the bank recapitalization.
Yeah, for me, it's not peculiar to Nigerian banks alone. Across the globe, investing in cyber security is a must for the bank, because we are taking the depositors' money and need to protect those funds. That is why seeing banks investing hugely into that aspect of their operation, into security, for me, it's a welcome development. But don't forget that in any economy, what is happening in banking is also feeding into the economy. That is why I say banking sector is the engine of any economy. Yes, consider the government here over here, I think having a trivial economy, come before the end of the year or the next year. But we can't do that without having your effective or a robust bank. And that is why, like you just mentioned, that the sentiment in bank as we speak now is a bit mixed because of what? The overregulation of the bank, and also fiscal authority also setting the banks also a part of dampening investors' confidence. But I believe that in any economy or any market, investor has a role to play. Why? That's why we have investors in the market. We also have traders in the market. It is what we are doing in the market that determines what we're going to do. Despite all this missentiment we are seeing, there's a lot of cyber issue, there's a lot of overregulation, a lot of government taxing the FS windfall of the bank. All these have sentiment in a market where mainly all the banks and the banks are in the market seeking for what? For funds from the public. But when the public see that the sector where they are seeking funds are highly overregulated, and also for that, most of them also have to state what is my goal, what is the attraction on the market, also what I'm going to earn at the end of the day. That's why I say I want to look at this sentiment in the banks in two ways, for investors and also for traders. For investors, this is an opportunity for you to buy into banks that show that yes, they have a record of good dividend payout in the history. And also that also means that we know that yes, past performance is not guaranteed of the future, but because of the nature of the banks, policy alone can make banks to make money. That's why when I look at interest rates for almost 2 years, 3 years now, I've seen that banks have been making money for the past 2 years because of what? High NPR. That is one thing. Another thing that I should put in mind is that yes, at the end of the day, for those that are investors, this bank, if they collected all this money or this money comes to their coffer, they're going to do more business because the bank become more robust to do business and at the same time earn more money. But for traders that are in the market, is it the right time for you to buy banking stocks? Because at the end of the day, all the banks will kind of float up their share in issue. The bank going to triple their performance on top of the month so that they can earn good, earnings to pay good dividend. Yes, we want to say not on the immediate time or the short term, but because the banks will have good money to do bigger business. That means in the future they might make money. That's why I say for those that are thinking long, you can buy a banking stock now, even as they are coming to the market to raise funds, especially those that are selling at a discount within the market price. But for we that are traders in the market, we want to look at what will drive the price at the end of the day. As we speak now, all eyes are on the banks interim dividend that are coming. But for traders, are you interested in interim dividend? What is the peak of these banks? If most of them have touched almost at the high 35, 25, are they going to get that price again for traders? That is why in the market now there's a missentiment because those that are investors are looking for a cheaper price to buy at the upper price. But Why traders are still waiting to see what will drive bank's price? For me, I believe that for investors or traders, let your investment objective drive you in this market for what? For banking stocks.
Okay, so how do you see the market performing today, closing? Because we've seen this. We think Tuesday's green close, as I mentioned yesterday, probably was a fluke in the market. It wasn't sustainable. We're seeing it's in the green today, but we don't know how it's going to close. So could you just look into your crystal ball and tell us how is the market going to end up today and probably for the week? Because we like an analyst did say, August historically is a month of downtime for the NGX. So what do you see for the market today?
But for me, I see the market maintaining the green position, even though it might be marginal. Seeing that yesterday we saw that at the end of the day, we saw that the trading pay of market portion, we saw a decline across all the tenor, the 91, 182, and 1. It tells you that yes, if this trend will continue, it will be a plus for equity market. Especially, we have seen that the month of July, we saw a slowdown in inflation. That's also a kind of indicator that we might see the coming MPC meeting in September, we might see a kind of a change rate or MPR maintained at the keys now. But if there's any slowdown in terms of cut down or kind of rate cut from them, fine. But even though the lecture or change at the end of the next month MPC meeting, that would be a plus for equity market. That's why I said what we are seeing in the market today, it might be sustained at the end of the day, even at the end of the day, because what we've seen at the options have given a sign. If this trend will continue, we'll start seeing continued decline in yield or rate in physical market. That would be a plus for market for the equity market. For me, this market might close also in green today, but not at a huge gain, but marginal gain. Already we are seeing that market has gained almost around 0.05 or 0.04 right now. That trend will be sustained to the end of the day, especially if one will maintain its position and the life of insurance company that has spread the market so far, the life of Massad and ICO, and also other sector that also spread market. Maintain what we are seeing now. We are seeing that we are seeing more buyers than sellers. For me, the market will close in the green at the end of the day, but not at a future gain, just marginal to kind of reverse what we saw yesterday of 0.07.
Thank you so much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting Limited, for sharing your perspective on Business Incorporated. We look forward to the market close in the green and see how investors will play tomorrow as well.
That's for having me.
So let's look at other major markets now in the Gulf. We see in the Middle East, we see Abu Dhabi. We saw mostly negative sentiments there. Abu Dhabi was the outlier at intraday, up 0.18%. Dubai trading marginally down 0.04%. Let's see how Saudi and the Qatari indexes fared at intraday, 0.09%. And then we see Qatar index also similar margin at intraday, down 0.09%. Well, let's take a flip now to the US and see how they performed. In early trade today, we see stock futures were slightly up in early trade. We see the Dow Jones up 0.11%, S&P 500 same margin 0.11%, and the Nasdaq futures also up 0.15%. And now we see that the software companies, Snowflake, is after yesterday, it released quarterly results that were disappointing. Share price fell yesterday by about 8%. Urban Outfitters also saw a stock drop over 8% after disappointing second quarter results. It's a earnings season and investors definitely are looking for money. So profits, return on investment, you got to be doing great there. Now on Thursday, investors will be keeping an eye on the weekly jobless claims data and the earnings report from Intuit and Ross Stores. Also, Fed minutes released Wednesday shows that the Fed is likely to cut rates in September. We're going to be keeping an eye and keeping track of how that goes. Let's look at Asian markets now. We saw mixed sentiments. Markets closed. Most of them were in the green. We saw Nikkei's index, that's in Japan, up 1.23%. Back at 38,000 level. Kospi in South Korea, not doing badly, up 0.24%. And the Hang Seng index is also up 1.44%. That's the Hong Kong index there. And Shanghai in mainland China, down, however, on the flip side, 0.27%. And the ASX 200 in Australia is up 0.21%. And if we want to look at South Korea, the South Korea Central Bank held rates yesterday. A lot of sentiments going around because inflation is tapering. Most central banks are beginning to either hold rates or cut rates. But the central banks are still cautious as to what step to take, not to act very quickly so as not to, be rash in the decisions. That the economy is very, very sensitive to these moves, especially when it has to do with unemployment or employment data that is coming into the market, which feeds into these indices and the factors that they use to determine it. We're just looking at all these factors that central banks, consider, and especially the Fed, looking at it, that they're not going to act very quickly. September is in the horizon there, but they're saying likely, probably. Those are languages that
sounds like a little bird told you there's going to be a hold.
It'd probably be a hold because they're just thinking if we cut rates too quickly, the data market is the labor market is where they're focusing on. And right now, they're not very confident that if they cut rates, it's going to help the economy.
Yeah, well, we'll see. September is just how many weeks away? So we'll just wait and see.
You'll definitely keep track.
Thank you so much, Will. All right, let's go to Berlin now and see what's happening there. Germany is cracking down on illegal cryptocurrency ATMs and conducting raids all over the country. Hundreds of thousands of euros were recovered in cash. Well, let's get more from someone who was there. Wada Ibman is in Berlin and joins us with the details. Hi, Wada. Good afternoon.
Thanks for having me, Amy. Yes, so the German authorities conducted raids on cryptocurrency ATMs. Basically, these are machines that operate as ATMs, so you could potentially withdraw cash from here using your Bitcoins or add more into your Bitcoin using cash or credit cards. But this is all unregulated. The raids were conducted on the illegal ATMs, some of which were in and around the city of Munich. And the authorities seized around 250,000 euros in cash. Now, this is really dangerous because it creates a lot of space for money laundering. That's what Germany's banking regulator BaFin said in a statement. 60 security forces participated in these raids. But it is possible to obtain a license to install a crypto ATM. For example, the company Courant operates multiple licensed crypto ATMs across Germany.
So there's also some conversation around Germany's budget and debt. Can you give us updates on this?
Yes, it seems the current German government is having a bit of a tough time. Let's look at the conversations around budget and debt. It seems the federal government and some states are complaining about a lack of funds. For months, the conversation has circled around this topic. Yet, a new report, which was seen by the German newspaper Handelsblatt, says that there are at least 76 billion euros sitting unspent. Majority of this is because the money was earmarked for certain projects that include construction or updates to the railway system, for example, but they have not yet been released.
So what about investors? Which way are they looking?
Well, after slight losses on the German index DAX yesterday, the index continues a winning streak up at 0.5% higher. Investors in Europe will mainly be watching out for the minutes of the ECB interest rate meeting. Some European company figures are also to come out today. Ticket marketer and event promoter Eventim will be publishing numbers today, as well as Swiss reinsurance company Swiss Re. Elsewhere in the US, jobs data came out and showed that the US had added fewer jobs than expected. But this shows the labor market has softened, and with inflation slowly climbing down, investors all over the world are preparing for a possible rate cut.
All right, yeah, that rate cut is everywhere. Thank you so much, Wada. Now let's go to the commodity space and discuss coffee, perhaps one of your favorites. A lot of people cannot do without coffee, especially in the morning, gets them up. So you can imagine, obviously, this is a global commodity, and we've seen movement in the price of coffee. We've seen, for instance, global coffee prices surging significantly this year, 2024, after averaging below $2. For most of the later half of 2023. Arabica prices have increased to a current of about $2.57 pounds, cents, I beg your pardon, right there. Additionally, Robusta prices have experienced an even steeper rise, jumping from under $1 per pound at the beginning of 2023. What does all of this mean for this very precious commodities? Of course, Nigeria's perspective is also important to us. We have Victoria Momo, analyst with Financial Derivatives Company, joining us. Hi, Victoria. I bet you took a cup of coffee this morning, did you?
Yeah, of course. Thank you for having me in it.
Yeah, so tell us about, we've seen the movement in the price of coffee. Where are we now in the prices? And would really love to know where Nigeria is in the midst of all of that movement.
Oh, wow. The global price of commodity is actually something that is very, very important, considering the fact that coffee is everywhere and people take coffee. The demand for coffee is actually something. So basically, we've seen that very huge spike in the price of coffee. Both the two types of coffee that are traded globally, that's the Arabica coffee and the Robusta coffee, have witnessed, significant increases in the prices, respectively. And I would attribute the price of, or the increase in prices of this commodity to the supply and then the demand dynamics. On the supply side, we've had the issue of low yield that has been a major challenge for key producing countries like Brazil and Vietnam. So there is currently the challenge of adverse weather condition that is, hampering the yield of coffee in those particular region. And of course, when there is a shortage of a particular commodity, it causes the price of the commodity to increase. Apart from that, there is also the aspect of the ongoing, global supply chain disruption that is also impacting, the shipping costs, as well as causing delays in, bringing the coffee beans from the farm to the market. So all of these costs are actually being filtered into the price of the commodity. And we expect that this price will continue to remain elevated, due to the fact that this adverse weather condition would continue to remain potent. In October, towards the end of October, these countries are actually going to experience a very significant change in their weather pattern that would impact the production of coffee. And that weather is actually the La Nina weather condition. It's a condition where there is low water temperature in the Pacific Ocean, and that causes, heavy rainfall in the Asian region, and then, drought in the Latin American. And these regions actually, host the world's largest producer of coffee. So we expect that, supply will remain short, and that would impact the prices of the commodity.
So let's talking about Nigeria now. Unfortunately, Nigeria has gone from a leading producer. I think in 2006 we produced about 89,000 kg, but at this time we're producing less than about 1,800. What happened?
I mean, Nigeria's declining coffee production is actually really concerning, considering the fact that we have growing demand for coffee in the country. Fitch Solution actually revealed that, the consumer spending on coffee as at 2023 was $286 million, right? And is expected to still grow by 9% in the medium term. So, I mean, that demand is actually there, but to meet the demand, basically, Nigeria imports this commodity into the country. That's for instant coffee, because that is the popularly demanded coffee in Nigeria. So Nigeria imports this particular commodity. And we are aware that, the prices of this commodity is increasing and is expected to even increase further. So that means that we have to pay more to import this commodity into the country. What exactly is going wrong? I mean, we have several challenges that is hampering, the coffee industry in Nigeria. We have 14 states that produce coffee, but what's happening to the yield? The challenges are not far-fetched. We have the issue of aged trees. The trees that are planted are really quite old, and the yield that come from these trees are very, very poor and cannot even meet, the domestic demand and even available for exports. And then even the farm practices that are, being done are at subsistence level, and that is affecting, the yield of the particular commodity. And then there is also the aspect of poor investment, from the side of the private sector and even the government, because, all eyes on the black gold, and everybody is forgetting that there are agricultural commodities that demand attention and have really great potential. So basically, this poor investment is actually weighing on the potential and the capacity of Nigeria to explore the coffee industry. If you take Ethiopia, for example, that is the 5th largest producer of coffee. That particular country gets 30 to 35% of its forex earnings from coffee alone. I mean, that's pretty impressive. So what are the things that are being done? It means that they actually direct a lot of attention to the cultivation of coffee in order to, explore the potential that the coffee industry actually have. Apart from that, they also set up, more importantly, a coffee board that ensures that the interest of the producers and the traders are actually being protected. And then there is also the aspect of research and development to ensure that the coffee that is being produced is of international standard. Ethiopia actually produces Arabica coffee mainly, exclusively, and they gain a lot of foreign exchange from the export of that coffee. I mean, we can borrow a leaf or two from Ethiopia in order to boost our, coffee production, to take advantage of the rising global prices and the rising demand for coffee generally, not just for direct consumption, but for many other commodities. Coffee can be used to make pesticide, deodorant, and the likes of it. It has a very, very large value chain, and we can explore that.
Yeah, as with palm kernel or palm oil and many other products or commodities. But unfortunately, these things have remained just potentials in the country, and a sad one at that. But thank you so much for sharing those tips with us, Victoria Momo, analyst with Financial Derivatives Company.
Thank you very much for having me.
Now let's move to other parts of Africa. Now, the new import duty for fuel tankers in transit in Zimbabwe to be paid on entry and refunded on exit was necessary to curb the abuse of the electronic cargo tracking system, according to the Permanent Secretary for Finance, Economic Development and Investment Promotion, Mr. George Guvamatanga. The government in 2017 introduced the electronic cargo tracking system that uses electronic seals and transmitters to monitor cargo in particular field in response to increasing incidences of transit fraud, whereby goods imported are being in transit and supposed to pass through Zimbabwe to another country where offloaded on the local market without payment of the requisite duty. But in the midterm policy statement presented last month, the government introduced a temporary import duty on fuel in transit to other countries with a tax paid on the entry and refunded on exit for legitimate transit cargoes, but removing the incentive of escaping duty on cargoes offloaded within Zimbabwe. Speaking during a Zimbabwe Economic Society and is Frederick Ebert. He says that in Harare, that the new duty was introduced because of electronic cargo tracking system. Still in Zimbabwe, the president there, President Emerson Mnangagwa, earlier today presided over the handover ceremony of 1,760 metric tons of rice as part of food assistance to Zimbabwe by the Chinese government. The assistance from China feeds into government's food assistance program meant to help communities in light of the El Nino-induced drought experienced in 2023-2024 season. The Chinese government is being represented by its ambassador to Zimbabwe, and the rice is to be distributed to vulnerable communities, including Harare Children's Home, Jairos Jiri Association, Salvation Army Homes, among others. And then we move to North Africa, where the Central Bank of Egypt is offering a total of 55 billion Egyptian pounds in treasury bills. And that was done today, and it's in coordination with the Ministry of Finance. The CBE's offering will feature two auctions. There's a 182-day T-bills worth 30 billion pounds maturing February 25, 2025, and there's also the 364-day T-bills worth 25 billion pounds maturing August 26, 2025. Treasury bills are short-term government debt instruments with maturities ranging from 3 months to 1 year, and they're considered relatively safe investment option. We're still in Egypt. The number of Egyptian women with transaction accounts have reached 20.8 million in June 2024. That is about 64%, an increase from 62.7% in December 2023. This is according to data from the Central Bank of Egypt. The growth stems from CBE's initiatives in collaboration with National Council for Women, as well as the Ministry of Social Solidarity. They are both focused on enhancing women's financial inclusion. The CBE's efforts, supported by various government bodies, aim to expand access to banking services for women, young people, people with disabilities, and entrepreneurs through regulatory support, tailored products, and widespread financial literacy programs. It's time to do crypto now. And following that news last week, that in Dubai, in the UAE generally, that it's now legal that salaries can be paid through cryptocurrency, where there's another development, but we'll get to that in a moment. First of all, let's look at the numbers and see the board right there. See that the color is green today. That's unlike what we had yesterday. And we see Bitcoin has increased by almost 3% to $61,000. A good one. But I mean, these days you can't really by the time you blink, something has changed. We see the green spreading to Ethereum. It's up 1.77% at $2,628.44. BNB also in the green. Doge there, Cardano, a lot of greens here, different shades of green. XRP also is in the green. So let's find out perhaps what is driving this and settle on some of those conversations with Solomon Amunde. Hi, Solomon. Good afternoon. Hello, Solomon. Can you hear me?
Yeah, good afternoon, Amy.
Okay, yeah. So what's driving the markets? What's hot in the markets at this time? At least we've seen a flip from the colors we had this time yesterday. How can we explain that?
I would say it's based on the euphoria coming from Tron blockchain and also Binance Smart Chain, talking about those that trade meme coins. So we're seeing lots of on-chain activity and lots of euphoria from users trying to buy into most of these meme coins. So most persons are hyped about this new development, and that's why we're seeing some positive spike in the markets these days.
And then we hear that Tether is planning to launch a stablecoin pegged to the dirham. Is this a follow-up to that legalizing of salaries in crypto that we saw last week?
I'll say technically, yes, but it's more of the UAE plan to accept cryptocurrencies long term, since they are aggressively building their ecosystem. And we all know the Prince is all about the future, making the ecosystem ready for development and new investments. So they have actually embraced cryptocurrencies and blockchain and Web3 technology. And they are doing all it takes to make sure the ecosystem thrives and also it becomes the center of development. So I would say it's a welcome development for the crypto space and also for people looking to build stuffs around stablecoin. I would say that's really good news.
Yeah, well, good news on the one hand. I don't know if you heard what they're doing in Germany. So there have been reports of illegal transactions around the crypto and ATMs. So it seems perhaps this is one of the reasons why a country like Nigeria is dragging its foot when it comes to actually inculcating crypto into the financial system of the country.
Yeah, I would say Nigeria, we're playing it safe. We're trying to learn from the errors that other countries would make. And also it's because we don't have the right infrastructure in place to be able to crack down on most of these crimes. So it's only fair that we take it one step at a time. But for the more advanced countries, they have no issues experimenting. They have the infrastructure and they have the willpower to get these things done. So I would say it's fair.
So did the market react to the minutes, that was released yesterday, the Fed minutes?
Yes, actually. Immediately the minutes were released, we noticed a spike. Bitcoin was around 59,200, but immediately it was released, we saw a spike to about 61,000. So I would say the markets reacted positively to the minutes of the meeting that was released yesterday.
But is it sustainable though?
No. I doubt it's sustainable. I'm still looking at a scenario where Bitcoin makes a run for $63,500, and after which we correct down again to the range of 59K and 55K. So I don't see us breaking out of this consolidation zone in this month. I don't see that happening. I'm still forecasting that would happen most likely towards the end of September. So I'm expecting that.
But a speech from Trump can actually move things one way or the other.
Yeah, definitely it will, but
Because elections are around the corner.
yeah, definitely it will to give us some positive spike. But the question is, will it be sustainable? It's a good stuff for swing traders. They can always trade the news and decide to buy when the price retraces. But long term, for those traders that focus on long term price analysis, they will tend to wait and have a clearer picture of what the price is saying before they can jump into major assets. So for swing traders, they can take advantage. For long term traders, not really.
All right. Well, everybody choose where you want to be. Solomon, thank you so much for your time this afternoon.
Thank you very much, Jenny.
All right, so that's it on the program. We're drawing the curtains right here, only to open the curtains again tomorrow at 10 a.m., where we'll do this again. We'll do 30 minutes at first and then 55 minutes later. Mini John Ecuador, enjoy the rest of your day. I'll see you tomorrow.